Hi everyone, welcome to Level Up Personal Finance. This is the channel where I share videos on my actual personal finance numbers, net worth, budgets, stock portfolios, cryptocurrencies, etc. And what the purpose of the channel is to share what's working for me and also share what's not working for me. So hopefully you can learn something and be entertained by this. If you like what you see, please feel free to hit the subscribe button so you can see more content like this. But let's go ahead and get started. I'm going to be hitting on three items today. One, a very quick, philosophy on why I choose certain stocks in my retirement portfolio. Then we're going to get right into the meat of it, where I'm going to go over the individual stocks that I own and why. And then finally, just kind of talk about where do I get information about my stock picks. And in fact, what I'd recommend is I'll put chapter titles below, but definitely see at the very end. I'll tell you what I think my secret is, but where I get some of my information that helps me out. Let's do a quick disclaimer here. And maybe I don't know what I'm talking about, and that's how you should probably take this video as you go through here. And, and really that's about anyone you see on YouTube, on the internet, even on TV, understand where they're coming from, what they have, realize that their picks of stocks might be just as wrong as the next person. Do your own due diligence, do your own research, talk to financial advisors if you have them, and if you don't have one, maybe look into getting one. But don't just follow someone's advice ever, and that goes double for me. So, whenever I look at stocks, I've heard a lot where people always say, I'm looking to buy the next blank. And this is kind of like, let's say right now someone may throw in Apple, Google, or Amazon into there. In past decades, it might have been Microsoft, Intel, etc. And really what it means is people are chasing the 10x gains, the 50x gains, etc. So people want to have a big return. I mean, who doesn't? The problem, though, is being able to identify those sort of future gains that you may not be able to get. I mean, it's real easy to say that if you'd bought Amazon in 1999, that it would be where it's at in 2021, but I don't think anyone would have known that. So it's impossible to not see that until after the fact. So what I always kind of look at is this, is why don't you go ahead and buy Apple, Google, or Amazon now. Now you may not see the 50 times returns, but you're going to see some pretty solid returns. And I think that's actually sometimes good enough. So I think that you should always have these in your portfolio. Doesn't mean you can't go for some home runs and pick some stocks that maybe have high growth potential, but let's stick with them. And why should you stick with large companies that are succeeding today? Well, one, money makes money. These companies have a large amount of money on hand and they can go out and make buys. So for instance, what can they buy? They can buy smaller companies that are disruptors. So companies that are starting to succeed, but that they have the ability to go out and then add it to their own portfolio and actually complement their other product lines. So it's something that's always good to think about that. Also, they can buy competitors. So if they see a problem out there, they can go out there and actually, instead of trying to compete with someone, just go out there and buy them. And then once again, pull those services or products into their own, marketplace or into their own tool chest and be able to value from that one. So always think about that one. The big companies are big for a reason, and they actually have the ability to stay so. However, always also remember that large companies do have flaws at times. They are tied to the status quo. They don't want some things to change. If large companies always stayed large companies, then I think we'd be talking about the largest companies in the world would be Sears, or GE, or Ford, or US Steel, and obviously they're not anymore. So something happened that made them lose that edge where other companies are there. But it wouldn't shock me that if we turn the clock ahead to 2040, Apple, Google, and Amazon may not be in the exact same position they are now. So let's jump ahead now to actually my retirement funds. Like a lot of people, I have a fair amount of money that are in mutual funds or ETFs, which are basically a basket of the overall market or different segments of the market. And I have about $580,000 in my retirement funds right now. So 480,000 of that are in those funds or ETFs. And really I have about $100,000 in individual stocks. And that's what we're going to be talking about today, are those individual stocks, and break down why I actually have selected each one. So here is the breakdown of the $100,000 in my retirement funds that I have put into individual stocks. I've categorized them here into different areas that kind of show that it is across different segments. However, it is definitely very internet or tech heavy. There are a few exceptions which I'll hit on, but now let's kind of quickly go through each segment and I'll give kind of a quick recap on most of the stocks and why I think it's important for my portfolio, and perhaps it's something you could consider as well for yours. Okay, internet retail, so about 25% are about $25,000, obviously. I have Amazon and Shopify on here. It's hard to really even categorize Amazon completely because, they have their store, they have actual products they sell with Amazon Basics. They have, Prime membership, but really with their Prime Studios, they have a lot of entertainment options that I know a lot of people use as a competitor to a Netflix or a Disney Plus or an Apple TV Plus. So I think that's why Amazon is so set up for the future on here. And obviously, I'm also not even thinking about, I almost forgot to mention that AWS with their web services. So even if you broke them into components, Amazon is so valuable on its own, and it just seems like an unstoppable force right now that perhaps they might be broken up someday or even voluntarily decide to break up, and that may actually even bring out more value in there. So also with Shopify, I'm a big fan of Shopify. Not that I personally use them, but I love the model they have up where they make it very easy for individual store owners to create their own online shop. And then Shopify builds the whole experience and it makes it easy for people to quickly jump into the realm of selling on the internet. So, and then Shopify just takes their fees along the way. So a big fan of theirs. One thing you'll notice through a lot of this is I like picking the winners in every category. I might pick a few like future growth ones, but I like someone that's already winning and is poised to continue to be in the #1 spot. Internet hospitality, Airbnb. I think that, they're basically the name of their sector practically. I mean, I know they have some competition from VRBO, but Airbnb is really just coming a worldwide dynamo when it comes to their space. Obviously, they compete a lot with hotels, and I believe their market cap is effectively double the size of the two largest hotel chains, or maybe they're equal to the two largest hotel chains out there. And Airbnb doesn't have the same cost that the other ones do. So while their revenue might be lower than some hotel chains, their costs are ridiculously lower. So therefore, I think Airbnb is going to do nothing but grow as more and more people actually start to utilize their service. And as we open up from COVID-19, I think for the next year or two, Airbnb will just continue to take off and grow even more. Automotive. I think everyone knows what Tesla is and what they're doing in the marketplace out there and how much they've been loved over a lot for the past 12 to 18 months. I know this year has not been the best for them. And in fact, I've actually taken a little bit of profit. It had grown so much last year that I made a call to go ahead and or at least lower the amount of my portfolio in Tesla. Made some good profits with it. It is down, as I said, this year. But I think that if Tesla keeps going forward, I don't see nothing but good things for them. The big risk I have with them is their CEO, with Elon Musk, and whether or not anything will be said or done that could actually impact Tesla. He has seemed to calm down a little bit about making comments publicly on Twitter about Tesla, and except for more like basic comments, I think he's kind of been steered away from promising too much, since he could get in trouble with the government agencies being the CEO of Tesla. Now with entertainment, I really have two here, and there's other ones I'm interested in, but really Disney and Netflix are ones that I really like a lot. I think that I like how the original content that they're able to create for their different platforms. So like on Disney Plus, whether you have the Star Wars universe or with the obviously the Disney library and all the Marvel movies as well, and shows they're starting to create for that. I think that's going to do nothing but just continue to kind of keep setting that solid base of shows for their different platforms, and it will just allow them to just grow so much more in the future. And then when you tie into the fact that Disney has the theme parks, that they can bring in those properties into there as well, Marvel, Star Wars, etc. I think it's just nothing but great news for them. And on Netflix, no one can compete with the amount of original content that Netflix puts out there. I think I've seen numbers before where they practically have a new show or a new movie released every single day. I just don't think that anyone, even like HBO that has fantastic content, will be able to fully keep up with Netflix. And even if Netflix only has a certain percentage of their shows or movies or hits, when you're releasing over 300 a year, you can handle a few losses in there, and you'll obviously have some big wins in there as well. So big on both of these for the future. Now, energy, obviously now this is the one I'm getting away from the gains or like the tech side of things. For these two right here, ExxonMobil and CenterPoint, and some people don't know what CenterPoint is, but it's effectively a energy delivery system or a company in the southern central part of the United States. So they deliver electricity and natural gas to homes and businesses. I think both of these stocks are really more about dividend plays. They're solid stocks, huge return on capital when it comes to internal expenditures, and just fantastic dividends. So you can't go wrong with having some dividend stocks in here as well. Internet gaming, Roblox. I'm not personally a user of Roblox, but I have come to understand what their model is. And I think I've seen stats, for instance, where like half of American children under the age of 16 have used Roblox in the past year. And you know, if you control that big of a demographic, that's hard to avoid, that you don't think that they're not going to continue to find ways to make money. But effectively, if you're unfamiliar with Roblox, the way I understand them to be is that they are effectively a gaming platform that allows other people or other companies to deploy games on there, and then Roblox just delivers that to their customers. And then all parties can benefit if people start paying for games, buying things within the games, etc. So I really think that Roblox has positioned themselves well and just going to have some great returns in the future. Okay, so now the other 24%, and don't worry, I'm not going to hit on each one, but I did want to talk to a couple ones in here in case you aren't quite familiar with them. Prologis, they're a real estate company, heavy on commercial, a lot of warehouse space. Heard nothing but great things about the way the company is run, and also about that some of the dividends that they pay. So I just kind of thought it wouldn't be bad to have a little bit higher exposure to real estate. Facebook, I think we all know who Facebook is without a doubt. I've kind of found myself over the last year utilizing Facebook services less and less and enjoying that more and more. So I've actually been decreasing the amount of Facebook stock I have, and part of this exercise makes me think I'm just going to reduce it. I'm going to actually take it down to 0. I'll still have Facebook on some of my mini mutual funds, but I don't think I need to have any individual stock with them. I know they're still doing well, and I've done well with them over the last year, but I just think it's hard to own a stock that not only are you not a user of them, but you're actually kind of like an anti-user of them. So I think I'm going to be getting rid of them soon. Lemonade, if you don't know what they're a disruptor in the insurance space. They're kind of one of the flyers I have on here. Hasn't done the best so far for me, but I'm really looking forward to some gains in the future. And then Twitter, that was the last one I want to touch on, and maybe I might actually move that Facebook money over to Twitter. Why don't you let me know if you think that's a good idea or not. Twitter has underperformed over the years, but I know they're looking at some pay models. So if a user perhaps wants to maybe eliminate some noise, eliminate ads, a lot of things in the future, it's something I think that Twitter could do very well, because I know I'm a heavy Twitter user. I like reading content on there, but definitely there's some content that I'd rather kind of keep out of the way. And if they wanted like 5 or 10 or 15 bucks a month, I'd probably be more than happy to pay that to them. So that's kind of where it is. Okay, so I'll take a breath right there and just kind of give a recap of all these stocks that I've had over the last year. And I actually did an analysis today, and effectively I've done about 1% better than if I'd kept it in perhaps the S&P 500. So not exactly a big win, but I'm just kind of getting into, a little bit of, like I said, probably about 15 to 20% of my overall retirement portfolio is now being actively managed by myself. So it's something that I think I'm going to continue doing. I might actually cut down on some of these, especially some of these other ones where I have a lot smaller amounts in them, because I'd probably rather go with fewer stocks and have more in each one. So it might be something that over the next few months I might look to eliminate some of these, or at least consolidate them and not be spread out across so many different categories. Okay, now where do I get some ideas for stocks? I mean, I think we all do things like CNBC, business websites, etc. And I think those aren't bad ideas, because you do hear about things, you hear about some momentum, and you start learning some things. But obviously you need to do your own research on here. One thing that always I kind of pause on is if I just hear like a stock tip that's about, this stock's about to pop 20%, 25%, you're going to make a ton off this. That's not enough information right there. I mean, what I would really recommend you do is really understand how that company is positioned for long-term growth, especially with disruption companies. And I put long-term in quotes there because I think long-term has changed the definition of that over the past few years, or at least over the last couple of decades. I mean, it used to be that long-term growth was maybe 5-6 years longer than that. And now I think that, consumers actually see things, or they demand change a lot faster than that. So you don't have to pick something and hope it turns out in a decade. I really think that you can start to look at what you think that something that you, people in your demographics, friends would actually utilize, and start thinking about, is that a company that you would see as growth? So kind of use your own judgment, but definitely review what other experts say as well, because it's not just about the cool factor with it, but actually how are they set up for capital, and also when it comes to their overall like revenue and income growth. Now, I promise you one thing that I've kind of found very valuable, and that's what I've listened to a podcast by Scott Galloway. So Scott Galloway is a professor with the NYU Stern Business School, and he also has been, I think, the founder and sold a couple of startups along the way. I think he is a digital marketing and brand marketing expert. At least that's what I think he calls himself on there, and I actually find him to be that way as well. I listened to him on 2 different podcasts that I can't recommend enough: Pivot with Kara Swisher, and also the Prof G Show. Now, one thing I like about Professor Galloway is his ability to evaluate the potential of many of these companies in the future. Now, once again, don't just take someone's advice, mine or his or anyone. Do your own research. But I really like that he is good about honing in on obstacles that company is going to face in the long and in the short term. And then what are their opportunities? So is the sky the limit for them? Are they really in a niche market that while it might be successful, it's not going to see any big growth in the future? So anyway, I'd recommend him, and I'm glad you hung around to the end. If you're still with me, and hopefully you enjoyed this one, I'd love a thumbs up. That helps other people see this video. And if you're also still listening, please subscribe. It's content like this that I enjoy putting together, and I really much enjoyed putting this video together. So let me know what you think, and I hope to see you again. Bye.